recently, for the first time in a couple years, Manhattan rents have fell. Also, I saw Wall Street Journal posted a report. A few people posted a report. We even posted about this, but yesterday they posted a report saying that it no longer makes sense to buy a home, as far as the price for a mortgage relative to the average rents. They saying like it's actually not in the best interest of most people to actually buy a home. So and then we talk about hedge funds buying a lot of single family homes, stuff like that. So where do you think we're at in the housing market right now, and how do you see that playing out?
Yeah. We know home affordability is at its weakest, lowest point ever, right? Relative to people's wages, what mortgage rates are, and the average price of a home. So home affordability is pretty much out the window for a lot of people. That said, buying a home is a huge emotional decision, but it's also the biggest asset most people are going to ever purchase in their lifetime. It is also, in a lot of cases, the foundation for building generational wealth. Why? You buy a home, you potentially hand it down to your children, who hand it down to their children, becomes the family home. So I always think it's going to have that special place in our hearts. The fact that it's not affordable these days is kind of heartbreaking if you think about it. So either we're going to have a lot of construction of new homes, which means there's going to have to be demand, which means mortgage rates are going to probably come down, which we know they're already coming down. So we're going to have a boom in building of single family homes to meet the demand for the new home buyer that really wants a piece of that so-called American dream. I think the spring and the summer is going to be a reawakening for the housing market, as mortgage rates have already come down below 7%. When they crack that 7% number, guys, activity heats up right away. Mortgage refinancings, mortgage applications, all that comes back right away because people are so hungry to buy, whether that is individuals who are trying to buy their first home, people trying to buy their second home. And remember, people that own their homes, 50% of people that own homes in America today have a mortgage rate below 5%. So they have been disincentivized to sell, right? They're not going anywhere because they're not going to go out and get a house at 7% or 8%. So they're stuck. They can't sell. Buyers that want to buy can't buy. This is all going to crack and thaw come the end of the first quarter, beginning of the second quarter, going into the spring season. I think we're finally going to have a revival of the housing market, which is great for housing stocks and great for the stocks around housing, right? To furnish your home, to add the sunroom onto your home, to add a new roof or whatever you need to do. I think you're going to have a reawakening of that. And I think that's going to be good news for the economy. Also good news for people that are trying to get into their first home.
It's crazy. You just said that, and that was in the Wall Street Journal yesterday. Buyers are ready to buy, but the sellers are not selling, right? Because you have a large population of people that have interest rates that are pretty low, and they're like, all right, we're just going to sit here and wait. One of the other percentages in a piece I was reading was the amount of Americans that own stock. I think the number is at 60%, which is really encouraging, right? When we had a year like 2022, I'm assuming, and you can correct me if I'm wrong, is the amount of traffic that you're seeing declining as the stock market goes down. And now in a year like 2023, when we see the NASDAQ is up, the S&P is up, Dow is obviously up, we start to see that traffic increase. How does that ebb and flow work for a company like you?
Yeah, no, we get a lot more traffic when the stock market is hot, right? We need volatility and we need a lot of action in the stock market. It's natural. People would come to Investopedia during a time where they're making decisions about what to invest in, should they invest, how to invest. The flip side of that is it's not just stocks and equity related information on Investopedia. So in 2022, when we were in that dire bear market, things were spinning out of control. The flip side of those higher interest rates was that there was finally money in the bank, right? You can get 5% in the CD, 5% in the money market, 5% in the high yield savings account. So when traffic goes down in investing, it goes up in saving for us. And it goes up in things like insurance. So we have a kind of a balance. Think about it like a basketball team. The second unit comes in and they're better on defense and maybe working the ball up court. That's how it works here at Investopedia. But we prefer a bull market 100% of the time because that's where a lot of the activity is. So this year has been good, but it's kind of been a slow grind higher, right? It hasn't been this boom, off to the races. Now, the last few months have been more aggressive, as the Fed has indicated it's done raising rates. And now since last week, when the Fed said there'll probably be 3 rate cuts next year, traffic's been on fire because the stock market and the crypto markets are really hot right now. But we always have some balance one way or the other. We just prefer a nice hot bull market.
What advice do you give to a person who may have missed out on the bull run of this year? And
I also want to get your take on, like, all the information is there on Investopedia, all the definitions, insights, strategies. Why do you think people have such a hard time sticking with the plan through and through, even though it's proven to work over the course of time?
Right here, Ian.
Yeah.
This is our problem, right between our ears. It's our animal spirits that tell us to run when we should stay, tell us to stay when we should run, right? We let our emotions take over instead of having a plan. Now, what I love about what you do through Red Pen and everything else that you do is you actually have a plan. You have a strategy. If you veer from the strategy, you do it for a very specific reason, and you make a note of it, right? There's a plan. If we're breaking the plan, we better know why, and we better make sure we note why we did it. People don't go with an investing plan. They go with an emotion, or they heard something on Market Mondays, or they heard you say something in another interview, and that's why they're going to do that, and then it doesn't work out. And it's like going to the casino for the first time and you flush $60 away and you leave because you had a terrible time.
Yeah.
This is not a casino. This is a long-term marathon, right? So having a plan and sticking with the plan is super hard. It's okay to veer from it as long as you understand why. So I think that's it. Anybody that missed the bull market of 2023 or the recovery from October of 2022 to now, guess what? And we were talking about this earlier this year. There's always a bull market somewhere, right?
Absolutely.
So if you missed, the big run up in AI stocks, if you missed the NASDAQ 100's 50% run so far this year, guess what? Small caps are popping right now. There's a bull market happening right there. If it's not small caps, it's going to be another part of the market that's going to move. So it's about sector rotation, like knowing which way the wind is blowing. So you can say, I think it might be time for this sector to activate. Or just saying, look, I'm comfortable being an index investor. As long as I contribute regularly, I know I'm good for 8 to 10% a year on average. And that should be good enough for me as long as I'm consistent with my investing plan. I'm the editor-in-chief of Investopedia. I have exposure to the most high-end professional investing research there is, but I don't go out and speculate and buy individual stocks. I'm a boring index investor and an ETF investor because I'm not smart enough to outsmart the market. I'm smart enough to keep consistent with my plan and keep adding every month to it, every single month, like clockwork, until I'm done investing. And that's not for a good 25, 30 years.